Good afternoon. I'd just like to take a moment to thank you all for your support during these last difficult months since the tragic passing of LuxFLAG's general manager, Sachin Vankalis. Sachin was a great human being and a tireless supporter of sustainable finance. And he really exemplified LuxFLAG with his passion, ambition, and drive to move to a sustainable future. So thank you again. As chairwoman of LuxFLAG, I'm very pleased to see that after 2 editions, the LuxFLAG Sustainable Investment Week has already gained recognition, and that's really thanks to LuxFLAG's associate members who are showcasing this week where they are in the sustainable finance journey. Given the finance industry is on different stages of that journey, this week is really all about sharing best practices so we all advance towards the goal of making all finance sustainable. And for this 3rd edition of the LSIW, we thank you all for such a positive response with over 3,500 registrations, an amazing number. And I'd like to thank our host partners and media partners. 25 sessions over the week cover the latest trends and the most pressing issues in sustainable finance. We hope you find them useful and find inspiration in the progress that is being made to harness finance to find solutions to our current environmental and social challenges. In terms of housekeeping, the slides and the recording will be made available to you in a week or so. For questions, please access and click on the bottom right-hand corner of the 3 dots there. And please do ask your questions. I'm now very pleased to introduce the session hosted by Linklaters LLP, focusing on greater alignment between Islamic investing and the EU sustainable finance regulatory agenda, such as the EU taxonomy. Islamic finance has, as many of you in Luxembourg know, been a focus here, and Luxembourg is the leading Islamic fund center in the EU and the first European stock exchange to list a sukuk. So taking us through today's session is Neil D. Miller, Global Head of Islamic Finance, Linklaters Dubai, based in London, and Victor Louvet, who is Managing Associate, Linklaters in Luxembourg. So gentlemen, the floor is yours. Thank you very much.
Good morning, good afternoon, everyone, I should say. I'm actually sitting in the suite of a resort in the beautiful Lake District, enjoying views of mountains at the moment. So it seems an apt environment to be situated in to talk about impact financing and sustainability. As Denise said, I'm the Global Head of Islamic Finance at Linklaters and have been active in this sector for more than 25 years now, and over the years have seen a lot of changes and developments in Islamic finance and the way it's presented to the world. When I was approached by my colleague Victor to participate in this session, we thought that it would be interesting in view of the close relationship that Luxembourg has developed with many Muslim majority countries, both in Asia and the Middle East, in view of the work undertaken to facilitate Sharia compliant investment vehicle establishment in Luxembourg. I think the last time I looked, and as Denise mentioned, you've got in excess of 49 funds listed in Luxembourg, and also the listing of sukuk on the Luxembourg Stock Exchange. Since that first sukuk, I think you've had at least 21 now listed there. Those factors, combined with your regular hosting of Islamic finance seminars and conferences in the jurisdiction, meant that we thought it would be interesting to look at the opportunities for identifying the alignment of Sharia compliant investment criteria with the EU taxonomy and the work that is taking place in Luxembourg at the moment.
Thanks a lot, Neil, and hi everyone. To kick off this conversation we will be having on Islamic finance and ESG, I thought it would make sense to first define some of the key terms today. What is Islamic finance and what is impact financing? I think impact financing might speak more to most of you. It's the type of fund that has a narrower focus than simply ESG, and the intention is to generate positive, measurable social environmental impact on top of a financial return. Typically, we'll see impact funds that will strive to accomplish one of the Sustainable Development Goals adopted by the UN in 2015 around social, economic, environmental, and sustainability, and without any restrictions in terms of asset class. But I personally, when preparing this session, knew quite little about Islamic finance. And Neil, I think we all would be grateful if you could, in a few words, help us define what is in fact Islamic finance.
Okay, Victor. Trust you to ask the most difficult question first. There's a couple of paragraphs on the slide in front of everyone, so I'll just give a few broad brush definitions, and we'll explore in a little bit more detail later on some of the complexities. But essentially, the way I sort of introduce Islamic finance to people who perhaps not familiar with it is that it's a method of financing that conforms to the doctrines of Islamic law known as the Sharia. And the way it's conducted in the modern world at the present time, it allows Islamic banks predominantly, but also conventional banks with Islamic windows, as we call them, and investors to participate in the global financial markets and achieve commercial objectives in a way which are compatible with their faith, with Sharia. So it's something that supports the Muslims' ability to practice their faith in their everyday business activities. The way it's conducted at the moment, it broadly achieves what we would describe as similar or substantially similar economic results to conventional finance. And that in itself, whether that's right or wrong, is a completely separate topic for debate and discussion, which we won't go into here. But what Islamic finance should not be is a slavish copy of the conventional system. And I think the paragraph we've got in front of you sort of sums it up quite nicely. The Islamic financial markets model the Islamic financial market should be a model for mobilizing surplus capital, we'll come back to that later, within an economy on a profit and loss sharing basis, where the entrepreneur should not be entitled to a guaranteed profit, which is implicit in the case of an interest-bearing loan, but only to a share in the profits, if there are any, of the losses of a venture. And there's a lot that's hidden in that very brief definition.
Such a presentation of Islamic finance to at least understand what it is that we're talking about. Before diving into the link between Islamic finance and impact financing, I thought I'd give a brief overview of the EU's ambition towards sustainable finance. As many in the audience will know, and as was suggested also in the introduction video, there were 3 core legislative proposals that were approved at EU level. The first one is SFDR, which is a set of disclosures that are required on a pre-contractual, periodic, and also on the website of the financial market participants and investment funds, which require to make a certain set of disclosures towards end investors on the integration of sustainability risk, and also the different ambition of the fund that is being promoted in terms of the ESG characteristics that this particular product will have, or the sustainable objective that the financial product will have. The second key regulation is the so-called Taxonomy Regulation, which answers essentially the question, what economic activities are in fact sustainable. And the idea is to give market participants a common language as to what it is, what can be considered as sustainable. So for that, an economic activity will need to contribute to an environmental objective, which are set out in the regulation, comply with a set of minimum standards, and comply with certain technical criteria. I should say very technical criteria. And the third regulation is the benchmark regulation, which requires benchmark administrators to disclose how ESG is integrated in their benchmark, and also imposes a certain set minimum requirements to be met by standards such as the Paris-aligned benchmarks and the EU climate transition benchmarks. Neil, you mentioned, sorry. You mentioned that the Islamic finance is governed by a certain set of principles, and my first question to you is it fair to say that there is a certain level of alignment of Islamic finance with certain ESG concerns, and maybe to an extent with SFDR or Taxonomy Regulation?
Well, the answer is yes and no. And yes, it is correct to say that Islamic finance is governed by a set of principles. And as I hope many listening will be aware, the source of those principles is primarily the Quran. As such, they seek to discourage certain behaviors considered haram, while permitting behavior that can be broadly described as halal or permissible. So the overall approach of the Islamic financial services industry has always been to encourage the socially beneficial management of surplus capital, is that expression again, and is broadly considered to be, open speech marks, ethical in nature. Now, within the Islamic framework, there is a wide degree of subjectivity, and although the basic principles are relatively easy to state, hidden within them is a very large room for interpretation. So I think it is fair to say that this characteristic means that the general principles do not always have the degree of specificity, is perhaps the word I would look for, that might be found in European legislation dealing with impact investing and ESG activity. And for this reason, an exercise does need to be undertaken to establish those areas where there are commonalities to help identify areas of alignment or convergence.
I see, thank you. And so can you tell us a little bit more about those basic principles so that we can better understand the starting point from the Islamic perspective, perhaps?
Okay, yeah, I'll spend a little bit of time on this, and I've got a bit of a text here. I'm going to go through a few key points that I want to get across, because again, if people are not totally familiar with it, they won't necessarily be aware of this. But at the risk of oversimplification, you can distinguish between certain types of behavior that are prohibited, and I'll say a little bit about each. Hopefully everyone is aware of the first one, which is the prohibition against the Reba. In other words, the receipt or payment of interest. That is prohibited. Islamic economic and jurisprudential thought treats money as a means of exchange only, and it's not intended to be a store of value. The second prohibition is ghrar, and this encapsulates the idea of uncertainty or hazard. And in modern financial terminology, we might encounter this in ideas of fair dealing, equal bargaining positions, and full disclosure. In other words, the investor must be able to comprehend what it is he is investing in. The third prohibition is against mezhir, and this is a bit more complicated. In simple terms, it's intended to stop gambling, but in reality, it's much more subtle than this, and it recognizes that certain types of risk-taking, those that are reckless or harmful to society, and that's important, I think, or which bring no advantage to society, should be discouraged. However, risks that are encountered in genuine commercial transactions are permitted, and we'll come back to that later on. The fourth sort of factor to consider is that certain products and activities are considered un-Islamic, and so they are therefore prohibited. And this is relatively straightforward to get to grips with. Obvious one, pork and pork-related products for religious reasons, alcohol and similar products that have the potential to create addictions. But then we get to things like armaments and weapons of warfare, pornography and certain types of entertainment, all prohibited. And interestingly for us as financiers who are on this call, so-called conventional banking and insurance products that rely on interest, whether paid or received, are wholly speculative in character. They are also considered un-Islamic. And so I've sort of tried to think of another way of summarizing it. I've given you one definition earlier, but I come back to this expression. The holders of surplus wealth or capital should only be entitled to return on capital if they deploy it in a socially beneficial activity, we'll explore that, which accepts a degree of prudential commercial risk. Profit can be assured, which it is in the form of, profit cannot be assured, which it is in the form of a loan with interest. And in many respects, Islamic finance favors equity over debt, again, interesting in the context of the funds that are established in Luxembourg, when coming to financial interventions. However, if debt is incurred, it should be created in a manner that is permissible with Sharia purposes, and that is broadly achieved by adopting contracts based on trading relationships, such as buying and selling or leasing, rather than loans. So I hope that gives a bit more clarity on the basic principles.
Thanks, Neil. It indeed does bring greater clarity to some of those principles. I think while there is a common understanding what impact financing is, this doesn't prevent certain different level of ambitions depending on the type of product, the type of investors that are being targeted. We also saw that when preparing the taxonomy regulation that I mentioned earlier, about certain discrepancies or certain difference of opinion, certainly about the nuclear energy where we saw sort of political agendas clashing against scientific analysis. And so my question is, are there also nuances within the Islamic finance, and perhaps what does the Islamic jurisprudence say about the deployment of this surplus capital that you mentioned earlier?
Yeah, that's a really great question, Victor. And it's one thing knowing what the principles are, but it's a completely different thing applying those principles in the real world. I think there's several preliminary points I just want to get across as well, so it'll help our audience understand better what's happening in the Islamic finance market. And the first one is this. One of the biggest challenges that practitioners have faced when designing and marketing Sharia-compliant financial products is that whilst the principles seem relatively straightforward, how they can be applied can vary significantly from Sharia scholar to Sharia scholar, from institution to institution, and even from country to country. So in the more than 25 years I've been advising in this field, although much effort has been undertaken to commoditize and to standardize products, this basic problem of interpretation has not been eliminated, and we're beginning to see that crop up in the move towards green and sustainable products. So to put it in a slightly different perspective, and we've got some interesting language on the slide in front of us at the moment, some Sharia scholars will adopt a strict view, in other words, a narrower or a more prohibitive approach, while others will adopt what might be described as a more progressive or permissive approach. And these differing positions are sometimes described as Sharia heavy or Sharia light. The reality is that when interpreting what is or may not be Sharia compliant, there's a spectrum of views on many issues, and the challenge is to understand where the individual scholar or institution or indeed country places itself on that spectrum. Now, when it comes to matters of appropriate or ethical behavior, it's also helpful to think about something called Makasid Al-Shariya. Now, there is a lot that I can say about this subject, and I want to keep things as simple as possible. But broadly, we're talking about a requirement that sort of overarches Islamic finance, that transactions should not just be Sharia compliant in their form and legal technicalities, but also in their economic objectives, which should take into consideration matters of, here are the key words, social justice, equity, and fairness. The Makasid Al-Shariya is also sometimes referred to as the objectives of Islam. And the notion broadly centers on the protection of 5 key things recognized by Sharia scholars: faith, life, mind, wealth, and dignity. And they're concerned with addressing the overall objective of well-being. This is something that has been described as a strategic objective that recognizes a continuous endeavor to make the most of God's natural endowments of land, sea, and open space. And it does that in a constantly changing socio-economic environment. And this is something that's been within the Muslim or the Islamic faith for hundreds of years. So to the extent you're seeing language here that we're now seeing in green and sustainable financing, these thoughts and ideas have been within the Islamic financing sector for a long, long time. Now, having said that, again, that all sounds great and rosy, but when you actually turn to the Islamic banking private sector to see what's happening in practice, there are a variety of different perspectives, and I'll put them this way. There are some who argue that everything an Islamic financial institution does is, simply by being Sharia compliant, ethical, and therefore beneficial, and by implication, no further analysis or effort is required. There are those who recognize that Sharia compliant does not necessarily mean socially beneficial or ethical in any prescriptive sense, and therefore they would say that a more explicit set of standards are needed to benchmark products and transactions. And then thirdly, and this is one of the more interesting ones, which almost sort of shook me when I first discovered it 10 years or so ago in conversations with Sharia scholars, there are others who would argue that the job of achieving Makasid Al-Shariya goals, which I've outlined earlier, is not within the purview of private profit-driven organizations, which of course most Islamic financial institutions are, but should instead be and remain the responsibility of the state or the government. So in the years gone by, I have participated in many conferences around the world where we have debated these ideas and tried to reach conclusions about precisely what sort of financial intermediation is being, or to talk philosophically, should be undertaken by Islamic financial institutions. And I don't think I've ever witnessed a true consensus on what can be deeply emotive questions. Having said that, I think on a more positive footing, and as we shall explore in a moment, these things are beginning to change.
Thank you, Neil. You mentioned the overarching worldview that motivates or frames the Islamic financial intermediation, which I think many people do not necessarily appreciate. But does this diversity in approach that you mentioned exist? Can you tell us about the steps, if any, that the Islamic financial services industry is taking to address the move towards sustainable finance, whether driven by CSR or ESG principles?
Yeah, I can. And I think this is actually a very interesting question that goes to the heart of the future trajectory of the Islamic financial services industry. So on the one hand, the industry has taken a relatively relaxed view, certainly historically, some may even say a lazy view, when it comes to understanding the purposes and objectives implied by the Makasid Al-Shariya. And let me say a little bit about the factors that influence, for want of a better expression, past behavior in the industry. First of all, there is a religious focus. Many Islamic financial institutions, as mentioned earlier, are vehicles established to facilitate the more profitable investment of pools of wealth, very often aggregated from across the Muslim world, by a universe of wealthy, high net worth individuals. And these institutions are driven by a religious desire to have their wealth managed in a way that complies with Sharia principles. But as some observers have read, that actually is actually quite a narrow direction, and it doesn't necessarily correlate with the width of application that is present within notions of social and sustainable banking, which basically apply to all types of finance. So, Islamic finance, in the sense that it's trying to follow the guidelines of a faith, is relatively narrow. So that's one challenge. How can you broaden out that religious footprint? The next one might come as a surprise, but within many Islamic financial institutions, many of the employees are not actually that well immersed in the Islamic principles, and certainly not to the level of detail required by Makasid Al-Shariya objectives, because most of them, or many of them, have had their formative banking and financial careers in conventional institutions, and they don't appreciate the nuances that are implicit within Makasid Al-Shariya objectives. Many of them are still remunerated on a performance-driven basis, and in this environment, unless the instruction to manage assets in a manner that, in addition to being technically Sharia compliant, also is directed towards achieving Sharia economic goals, unless that direction is received by the managers from the shareholders, the management team will invariably look towards the most profitable products undertaken in sectors that they best understand. And that leads me into the next point, which is that there is a relatively narrow investment horizon. And this has been a constant feature and criticism of the Islamic financial industry over the years, is that they focus too heavily on the real estate sector, admittedly in a variety of manifestations, but that is where a lot of Islamic institutions have their investment focus. And there's been limited real inroads into other sectors, and you have to look away from the traditional sort of Islamic banking and investment sector or providers to governments, to GREs, and to interstate institutions such as the Islamic Development Bank for examples of wider activity that maybe touches some of the the topics of interest to social impact and sustainable finance investors. Again, having said that, it's beginning to change. And if I put those criticisms aside, the Islamic financial services industry is not immune to the trends and the shifts in direction that affects their conventional competitors. And as a result, in the last few years, we've seen a recent uptick in activity and the language of sustainable finance with a greater focus on what I would say, or loosely describe as development goals. Even more recently, and I'm talking about within the last 2 years, frankly, the terminology encompassed by the ever-growing number of acronyms, a slight degree of cynicism from me here, CSR, ESG, SRI, SDG, all of that is increasingly being used when new deals are being announced. And I would say that that vocabulary, alongside fintech, blockchain, crypto assets, and to some extent there's some overlap with these terms as well. This is the language that is now being adopted in any discussion about the future direction of both the Islamic financial service industry and also the key jurisdictions in the Muslim world where these techniques are most commonly deployed. So that's quite a fascinating shift. In my next few remarks, I'll say a little bit about, well, I'll try and shine a little bit more light on what's happening specifically. So historically, there's been a divide between Asia and the Middle East. In the modern evolution of Islamic financial jurisprudence and regulation, there's always been a divide between the speed with which Asia, and for this purpose, I'm principally talking about Malaysia, but now more recently Indonesia is coming into play, and the Middle East when it comes to developing legal and regulatory frameworks for Islamic finance. Malaysia has always taken the lead and continues to do so. And I'm going to give you some examples of where it is doing that in the area of impact investing. So in October 2018, Bank Negara Malaysia, the central bank of Malaysia, published its implementation guide for value-based intermediation. This is a wide-ranging document with big ambitions to encourage cultural and institutional change with a view to improving Sharia outputs. And if I just quote to you the document's overview, where it seeks to describe the VBI objective as follows. VBI is defined as an intermediation function that aims to deliver the intended outcomes of Sharia through practices, conduct, and offerings that generate positive and sustainable impact to the economy, community, and environment, consistent with shareholders' sustainable returns and long-term interests. So that's all heading in the right direction. And in November 2019, the Securities Commission of Malaysia published a document entitled the Sustainable and Responsible Investment Sukuk Framework Overview. Now, I'm not going to talk you all the way through that, but one of the most interesting things about this document is that it asks the question, and I should just step back and explain that a lot of the development work in Islamic finance in this sector has been principally in the capital markets or Sukuk space rather than the investment fund space, but we are seeing sort of seepage across into all other sectors, but it's being led by the capital markets Sukuk space. And this Malaysian document said, why should we have SRI, socially responsible Sukuk? And it answered the question that it raised by saying to facilitate projects which align with the United Nations Sustainable Development Goals. So we have the SDGs being focused upon here. They want to promote investor diversification, and another interesting one, they want to attract investors seeking SRI mandates that are green, social, sustainable, or have Waqf properties. And going a little bit into detail now, Victor talked about the complexity and depth of the definitions in the EU taxonomy, and that we're beginning to see this coming into the Islamic finance space. In this document, having identified why they want to do SRI Sukuk, they then sought to identify a list of green projects, and they ticked all the boxes that you'll find in the SDG documentation, so renewable energy, energy efficiency, pollution prevention and control, environmentally sustainable management of living and natural resources, etc., sustainable water and waste management, green buildings which meet regional, national or internationally recognized standards. So the full list is there. I've just cut a few lines out of that list. They also identified social projects. So they were looking at affordable basic infrastructure, access to essential services, affordable housing, employment generation, including the potential effect of SME financing and microfinance, and food security, etc. The additional item that the document specifically focused on as well reflected one of the key pillars of the faith as it concerns the charitable sector and giving, which is an important part of Islamic, the Muslim religion. And they identified Waqf properties and assets. So the creation of Waqf properties and assets in a way that complies with UN SDGs is now being recognized and encouraged as a right direction of travel for the Islamic finance industry in Asia and Malaysia. Within the framework that they have identified in this document, and I'm spending a bit of time on this because we're seeing this creep into other jurisdictions as well, they acknowledge that proceeds should be utilized to achieve or to invest in eligible SRI projects. There should be processes for evaluating and selecting those products, for managing and tracking proceeds, And then the other important one is the annual reporting obligation. And they also said that it was appropriate to have external review. And again, that's something that's important for demonstrating that the objectives are being properly and independently complied with. So I would say these documents, which you've seen first in Malaysia, are not so much indicative of a change of direction, but what I think they are is a realization, and I think this is the important piece, that the Islamic financial industry needs to introduce more rigor, more objectivity, and more accountability into the process of supporting sustainable SRI and ESG objectives, and do that within the focus of delivering Sharia compliant outcomes. That means the challenge, as I believe it is, for practitioners in Luxembourg who want to align what you are doing in Luxembourg to create forums for investment and support of the investment community, is that you need to work out the extent to which your venues can support the arguably more bespoke requirements of Sharia issuers and entrepreneurs. And I think the way in which you do this is by looking much more deeply into what is happening in Malaysia and more widely across Asia. And I think you can also move your examination into the Middle East because, and I'll talk about it in a moment, that there have been recent developments in the Middle East that show that it is now finally catching up with Malaysia in the way that it looks at these questions. So a long answer there, Victor, but hopefully that puts some flesh on the bones.
Thanks a lot. No, that's very interesting, and it gives a clear understanding of the trends that are happening right now on the ESG front. From the principles you mentioned earlier, I understand that Islamic finance is at its core, based on risk sharing and linkage to real economy, and especially the principle of Makasid Al-Shariya. I hope I pronounced that correctly. This idea of well-being. It seems to me like it's a natural step towards accomplishing some of the sustainable development goals that I mentioned earlier, particularly the SDG1, which is the implementation of policies on ending poverty, ensuring healthy lives, SDG3, achieving gender equality and promoting peaceful and inclusive society. So you pointed out that there was typically a divide in the way that countries in Asia and those in the Middle East have applied Sharia principles. And my question to you is, does that remain the case with the growing awareness of ESG principles and social impact investing that you mentioned earlier?
Okay, yeah. I've been giving this question some thought, Victor, particularly in the context of recent developments that are being witnessed in the Islamic product development space. And yes, the Asian versus Middle East difference has existed almost from the beginning of modern Islamic finance, which is mid-1970s. In Malaysia, there's always been overt government support for the proactive establishment of this regulatory and facultative framework that puts in place pathways to allow the development of products by markets and institutions in Asia. And until quite recently, I think that it's fair to say the Middle Eastern jurisdictions have been relatively laissez-faire about their development of regulations and facilitating that development, save for a few honourable exceptions, which are principally Bahrain and the Emirate of Dubai within the UAE, both of which have been sort of vying for leadership of the Islamic finance sector since the mid-1990s. So in the region, in the Middle East region, a lot of practitioners have been frustrated at what they see as a lack of top-down interest, let alone urgency, in the development of frameworks for Islamic finance. And I'm not just talking about sustainable finance here, I'm talking broadly, much more broadly than that. However, that is changing. And I think there's a lot more recent evidence of this. And I'll talk briefly about two different types of forms of change as I would sort of identify them. The first one is sort of effectively government-led. I'll just very briefly sort of mention a few things. So the Sultanate of Oman, if those of you who can cast your minds back to the so-called Arab Spring uprisings some sort of 8, 9, 10 years ago, it led to a wave of activity across the Middle East. And one of the things that happened in Oman, which was a country that prior to the uprisings did not even recognize Islamic finance, is that the population said, we want this thing called Islamic finance. And so eventually the government, in particular the central bank there, responded and put in place a legislative framework that started to facilitate Islamic finance. So this was an example of the last of the GCC states finally beginning to accept and recognize Islamic finance. And they've, since doing that, they've constantly started bringing in legislation to facilitate it. So that was a good step. And then more recently, the United Arab Emirates has had this laissez-faire approach as a federation. They've had legislation that does exist, but it's never been particularly detailed. But in order to try and address this question about diversity within the industry, they have recently established, in the last sort of 3 years or so, something called the Higher Sharia Authority. And that operates under the auspices of the central bank. And that now is seeking through its pronouncements to direct a shift in the way in which Islamic finance is conducted across the jurisdiction. So it's, you know, there's still the jury is still out about the effectiveness and the success of this body, but it is beginning to I suppose, homogenize the approach to Islamic finance in the federation. Perhaps a more interesting development, and this is very new, is Saudi Arabia and the kingdom's 2030 vision has started to empower agencies such as the Public Investment Fund. Some of you may be aware that the Public Investment Fund recently made a massive investment into Newcastle United Football Club. I'm not sure that qualifies as a sustainable or green investment, but the power that's been given to the PIF, as it's known, is to take steps that will enable the Kingdom of Saudi Arabia to become a sustainable economy that fulfills ESG guidelines. And a key plank of the next 5 years of activity of the PIF domestically within the kingdom is to support the so-called Saudi Green Initiative of moving from a fossil fuel producer to a renewables producer. So that's a really interesting and big move. And at the same time in Saudi, the central bank there has been busy implementing changes to increase its financial and regulatory oversight. So these are examples, just 3 examples, and there's a lot more of governmental activity in the Middle East. But I think the more interesting activity is something that we're seeing in practice, and we're seeing it in the vocabulary of deals, as I mentioned earlier, something called URF, or custom and practice. So Sharia has its sources in the Quran, and a secondary source in something called the Sunnah, or the traditions of the Prophet, peace be upon him. But one of the third and important sources of Sharia law is this thing called URF. It's spelled U-R-F in the English language transliteration. And it's about recognizing what is happening as a matter of custom and practice. And what is happening as a matter of custom and practice is that more governments in Muslim countries and more companies and institutions within those countries are seeking to embed behaviors encouraged by the principles of ESG, SRI, and importantly, the UN's social development, SDGs. And I think that as that happens, then these behaviors will become customary, and they will arguably form this earth that supports Sharia compliance. And that is quite a challenging thing to get your head around, but it's the sort of understanding that you need to have when you start looking at whether or not Luxembourg can support institutions operating on a Sharia compliant basis within this framework where these changes are beginning to come into play. You know, and it is early days for that development. So I hope that sort of gives you a flavour of what's happening, Victor.
Absolutely, thank you very much. This was very interesting. I switched to the next slides, which gives a few examples. I was wondering if you could maybe walk us through some of the more recent, in the last couple of years, some of the more recent Sharia compliant transactions in the sector to help us understand, what sort of activity is being undertaken.
Yeah, these are just a few. I mean, when I was preparing for this presentation, I sort of actually was surprised myself by the volume of transactions that have been going on. And this slide lists a few. The most recent one is also the one most relevant to Luxembourg, but I think I think this was as recent as a few weeks ago. We saw the announcement by Sedco Capital, major Swiss Sharia compliant asset manager in Saudi Arabia, and the Swiss private banking group Lombard Odier, that's what the SC and the LO stand for, launching a Sharia compliant UCITS sub-fund. in Luxembourg. So that describes itself as having a strategy that embodies the confluence of Islamic and ethical finance. Interestingly, it's going to be looking at investing in and outperforming stocks on the Dow Jones Islamic Market World Developed Total Return Index. So that is mostly stocks and shares in businesses that are in the developed world. So it's not so much an investment that's focusing on the Muslim countries as such, but that's one example. The Majid Al-Futtaim Green Sukuk was a deal back in 2019. Majid Al-Futtaim is a very successful retail business that has premises across the Middle East region, and I think they were looking at raising funds that were going to be used to help build out their network of stores and operations, but following a green footprint. The most interesting sort of regional, the other interesting deal is the Islamic Development Deal. This was the first so-called AA-rated so-called Green Sukuk, raised $1 billion. Again, I think I mentioned in my earlier remarks that it's to bodies like the Islamic Development Bank that we really have to look, I think, primarily for this type of sustainable, green and impact financing that will make a difference within the Muslim community itself. And so the bullet point explains where the IDB are looking to invest funds raised from that sukuk. The Republic of Indonesia deal is another interesting one. Again, that was a $2.5 billion sukuk, of which only $750 million will be used for green projects. And the green projects are going to be identified and the investments led by BNP Paribas and HSBC as green structuring advisors. And interestingly, they've made it clear on the face of the issue that the Norwegian Research Centre, Cicero, will be providing second opinions. So again, that's something that is beginning to correlate with what's happening in so-called conventional bond and other investment activity. Just one or two other transactions which sort of give you a flavour of this that aren't listed on the slide. But there was a fund launched in February 2021, again showing how new this is in the UK. Admittedly, it's a Cayman fund. Sorry about that to you listening in Luxembourg. But this was issued by an outfit called Prestige Funds, and it was looking at focusing on the agricultural, horticultural and rural small businesses in the United Kingdom. So again, not another obviously Muslim jurisdiction investment, but interestingly, it had a very prominent Sharia advisor called Mohammed Al-Ghari sitting on its board, and it's been branded as an impact investment. So I'm going to be interested to see what they find themselves doing. Another sort of product, and this is where it gets interesting as to what is the definition and what are you looking at in your taxonomies. But Gatehouse Bank is one of the few banks that is in compliance with the prudential banking requirements and is a signatory to the prudential banking requirements regulations. But they've just recently opened a new savings account in the UK only a couple of weeks ago, where they're paying a absolutely stunning rate of return of 1.51% per annum. But for each account they open, they're going to plant a tree. So, you know, we've got things happening in the Islamic finance space right at the top, multi-billion-dollar issuances to basically retail savings accounts. And that is happening across the, I would say that's happening across the Islamic finance product space, both from a sector, from a product perspective, but also from a jurisdictional perspective. And increasingly, as governments issue pronouncements about new deals, they're all using the language predominantly of the UN SDGs. So they are increasingly saying that Sharia compliant investment activity must correlate with those criteria. And I think that's where, that's probably your main kickoff point for then feeding into the EU taxonomy.
Great. Yeah, this is. I also didn't realize how much was going on in the Islamic finance. The number of deals that are going through is it's really interesting. Conscious of time, I would have another question for you. And my question to you is, you know, the challenges that comes to the identification, selection, execution of eligible transactions in the regions usually associated with Islamic finance. If you could give us a few, you know, an idea of the type of challenges that you know that needs to be met.
Okay, I'm conscious we can sort of wrap up with this. Yeah, and again, this is coming back to where I talked earlier about the trajectory of Islamic finance. It's going to take time, I think. There's a lot of headline grabbing, and that often happens in Islamic finance. People announce things and they don't always deliver in quite the same way. So when you start researching on this, you'll find that there are industry analysts who suggest that issuers have often been slow to make the link between Islamic finance and environmental concerns explicit. So that's a question mark. One of the reasons for that came out of a study that was undertaken some years ago into CSR activities of Islamic financial institutions. And it was sort of recognized and identified that giving charitably and making donations and doing things that might evidence your good behavior and your good intent is a very private matter. It's usually undertaken in a personal capacity. So Islamic banks don't necessarily, go around banging the drum about all the good works they're doing. Particularly, I'm thinking in terms of social impact and working in the charitable sector, in microfinancing, that sort of time. So that can have there may be a little bit of resistance there. But having said that, another report conducted by Schroders in 2019, looking at the regions, identified that 66% of Asian investors said they would always consider sustainability as a factor when selecting an investment product. In predominantly Muslim Indonesia, this percentage was as high as 76%, and in the UAE, it was 62%. Those figures are interesting because the global average is 57%. And this study went on to say that it suggested investors who would traditionally look for Sharia investment opportunities might be shifting to the traditional sustainability arena as opposed to the Sharia arena. Now, I'm not quite sure exactly how they reached that conclusion, because people wanting a Sharia compliant solution will still have a challenge with the structure of a deal if it's got interest inherent within it. But I think the point they're making is that increasingly people are looking at sustainability, and that means that if you're creating Islamic products that can tick those boxes, that will be of assistance to you. Another interesting statement I came across when I mentioned the IDB Green Sukuk, and when that was published, one commentator said that it is indicative of a mind shift towards sustainable finance within the GCC in recent months. So we're talking basically early 2020. But he also saying climate change is a reality we can no longer ignore. And that is becoming common across the region, but it's tempered by this other point, and that would be my last remark really, is that social impact, and for social I'm going to read green and sustainable as well, can mean something different in different contexts. And whilst values may overlap, the approach taken to solving problems can be quite different. And this really comes back to my earlier remark that it's understanding how you can bridge that gap or better improve the alignment between EU taxonomy and what you're doing in Luxembourg to create fora for investment firms and for sukuk issuances, etc., with those bespoke requirements of Sharia. You can't take things for granted. Just because it's Islamic doesn't mean it's ethical. Just because it's ethical certainly doesn't mean it's Islamic, for example.
Great. Well, thanks a lot, Neil, for these very informative insights. I'm sure everyone learned a lot, and I found it fascinating. I don't know, Denise, to you now. Do we have any question from the audience?
No, because Neil did such an amazing job of explaining everything. I thought that was really great, Neil. I had some knowledge, if you will, but I learned a lot, and it was really great to get an update as well, I have to say, as to what's happening. And it actually sounds quite promising, I would say, for Islamic finance. I know that.
I think so. Yeah. I mean, it's sort of like a happy convergence is beginning to happen. The only thing at the back of my mind, and I've read it a few times and spoke to people about it, is that pandemic, coming out of COVID and what have you, there's so much pressure on countries to raise funds for, well, all sorts of things, that some of the sort of pure alignment with the green and sustainability movement might be reduced because of the pressure of just dealing with post-COVID issues. But I think there's been I would say there has been a momentum shift, definitely now. You know.
I have a question from the audience,
Yeah.
the participants. So, what could the West, quote unquote, learn or take away from Islamic finance going forward in its sustainability journey?
Yeah, what could the West learn? Well, I mean, I think it's really, I mean, the core message is doing good, making sure you don't do anything that is harmful to society. So I think you do have to look much more closely at what it really means to finance any particular project. You know, what is that project doing to the environment? Trying to think of an example. I'll give you one example. So Islamic finance got very excited about palm oil and the trading of palm oil to support certain parts of the Islamic finance industry. But as many of you may or may not know, in order to grow palm oil trees, you have to destroy forest. So you've got this afforestation issue or deforestation issue in order to grow palm oil, to trade palm oil, because it might be better from an Islamic industry perspective to trade palm oil rather than metal products, in the LME markets in the UK. So that's sort of like a reverse engineering. If you're financing a particular project that's going to involve deforestation and what have you, then I think that now Islamic finance would say, and based on the principles that have been around from the time of the Prophet, that we are but representatives on this planet, and we have to look after what we've been given, and ideally we should hand it on to those that come after us in a better condition than it was when we received it. So, when you're financing projects, what are those projects really doing to the planet? That's the deep message, I guess.
Yeah, agreed. Great. And actually, I have a second question, but if we have a quick one, you like this, I think. Is there any marketing repositioning foreseen of Islamic funds for continental Europe market to be more called Sustainable Green Fund, knowing that green is also the color of Islam? I think that's just an interesting one.
Yeah, I'm sure there are people out there thinking about that color, and I'm sure I can't tell you offhand whether anyone's actually doing that, but yeah, I've thought that myself. The color seems appropriate. I think if you look at some of the literature coming out of Saudi Arabia, you might trying to think now, but give me 1 second. But I think some of the brochures that are coming out, yeah, if you look at Apicor that's another Saudi thing. I didn't even get to talk about this, but Apicor, which is one of the major investors and fund managers in Saudi Arabia, have just produced its green bond framework. There's a beautiful picture in green of a hummingbird on the cover, and the whole thing is basically green in color, the whole brochure. So yeah, that play is definitely going to be made. I'm pretty sure about that.
For sure. Great. Yeah. Okay, well, as time unfortunately has run out, I want to thank you again. It was great for both of you, you, Neil, and to Victor, and to Linklaters, of course, for hosting the session, and a big thanks to the LuxFLAG team for making it happen. So, yes? Yeah.
I was just going to say that's our pleasure, and if any of the audience do have questions, then I'm sure they can email Victor or myself after the event.
Right. Yeah. And I'll just end with the quote I've been ending with for the sessions, so that we now understand that sustainable finance is not just another type of investment, it's a complete shift of mindset. And some of that comes historically, I think, from Islamic finance, if I understand correctly. So our next session will start at 4 p.m., so in 5 minutes, hosted by Fidelity International and focusing on financing climate change. What is the role of the asset manager? So thank you again so much.
Thank you.
Bye. Thanks.
Thank you. Bye. Bye.